What's up, everybody? Welcome back to the Wealth Not Wait channel. I'm your host, as always, Joseph Coizza, and on today's episode, Making a Mogul, another investment. Go back in, look at some properties. I already picked out some pre-existing properties, and really what I'm going for, like we did with the Van Mala video, he wants 14% or above is what he's talking about. Landa doesn't really have anything like that, so anything above 8% is in play. I made myself a nice little list, and we're looking at something more for cash flow, because I invest in other things, and that's what I'm looking for as far as real estate is cash flow. There's a lot of other properties that have growth as far as their stock price, and as far as their value, as far as the homes. But for something like a third of the dividend price, it's going to grow 25-30% compared to my 15-20% on the stocks that I've picked. So I'd rather get the extra cash flow and then have a reasonably good, almost the same amount of growth than just purely the growth and a low amount of cash flow. So let's jump right into it. All right, so specifically what we're looking for, like I said before, we're going to be looking for 8% or higher based on cash flow. So something like Brooklyn, it doesn't do it. They're great shares. It looks like this is a really nice house, like you can kind of see. And of course, something like Brooklyn has a really great area, so the amount of money that it's going to bring for the property value over is going to increase. And as you can see there, right now it's pretty good as far as the dividend, but of course that is only temporary. The total you see here, it's 10,497. So what we would do is 10,497 divided by, because it's a multifamily, it's going to be 100,000 shares. And you can see right there underneath the little progress bar of the dividend, you see it's 100K. So that's going to be, per month, you're getting 0.10, so 10 cents per share. That's basically what you're going to be getting, is 10 cents per share. Times 12 is 1.259, so almost $1.26. And then, so that's per year. So you're going to get $1.26 per year. And if you divide that by the current share price, which is 27.37, you're looking at 4, borderline, it's a 6.046, so close to 5% on your money. Which again, the amount, the cost of the property, and it gives you here the whole total, the purchasing price and all that, the value of the property is going to go up. Especially something like here, it's a multifamily home, it's in Brooklyn, it's really nice. That's going to go up, of course. But for something like this, like I said, I want to be focused on both cash flow and the increase of price. So this may be good later on. I'm not super thrilled with it. I'll be looking at something at 8% or more as far as cash flow. So I went through beforehand and I found a whole bunch of cool stuff. I just want to point out something real quick, especially when they're taking photos of stuff. Did nobody pressure wash the fucking house? You can see right here there's dirt. You see right there there's the fucking leaves and everything. Let's see if I can go back to the photo. I understand that a good amount of their executive team is across the sea. They're focused out of Delaware. They're probably not here looking at these properties directly. But if you're selling investments into a house, if you want people to come and live here, if this is what you're showing people, the house looks like a nice house. And I understand there's fucking leaves everywhere, but as you see, it's green fucking leaves and all the dead leaves here. Okay, I understand you're not going to be fixing everything, but look at the big dirt spot. It costs $100 to $650 to pressure wash the whole house. You're telling me if you didn't pressure wash the house and you didn't clean it, and I'm almost certain that there's a worse one than this. This is the first one that I can find because I know I wanted to talk about this. If you pressure wash the house and then send somebody the next couple days later to take the photos of it, it's going to look significantly better. It's more appealing. Somebody's going to say, yes, I would like to live in that better. Especially if they're paying a premium for the house. If you're charging market cost for an area, which is a lot of fucking money in some places. Over here in Tampa, it's like $1,600, $1,800 a month for a fucking apartment. What are they paying here? Ready? Let's take a look. We actually say exactly what they're paying. So they're paying $1,300 for the single family home. And this is in Georgia, which again, I mean, relative to what you could be paying $1,800 in Tampa, which, you know, it's nice, ranch style, single family, backs into a forest, very nice, great. Love the idea of it. That sounds very good. But can you just pressure wash the fucking house? That's just something I noticed. And I think that the extra couple $100, I think, will get you more money, for one. And then two, it's going to be easier to rent when somebody looks at it and says, yes, this is definitely a property that somebody took care of. And they cleaned it. It doesn't look like a fucking lawnmower went across the side of it. It doesn't look like they had a fucking mud fight next to the sides. I mean, that's just horrible. This is, I think, a worse one. Like, look at the side of it. Look at all the grass and all. What is that, mildew? What is that, fucking mold? What is that, grass clipping? Look at that. Nobody fucking pressure washed it? Nobody cleaned the fucking house? It's a beautiful looking house. But the whole fucking side of it, obviously nobody, you just somebody go over there with a pressure washer and just wash it, especially on a white house. That's just something. And look at the back patio. That's what I'm saying. It's a beautiful, nice house. It's probably in a great area. What are they charging for it? Let's see, just real quick. Yeah, $1,100 for a fucking townhome. I mean, come on, I couldn't get that in my area. That's nice. This looks like a nice home. You know, one share left. Okay, obviously it's trading pretty well. You don't fucking pressure wash it. You know people are gonna be investing. Like, look at the door. Look at over there. Look at all the dirt fucked up. The simple little things. All the dirt behind the numbers. You could already tell that it's all types of fucked. You just clean it. Look at the gutters. I can tell you, but right there, it's just something so simple. Just pressure wash the fucking home, spend the extra $100, and you're gonna get more investors because it looks like a better house. You need to get more people wanting to move into it, and you increase your demand, especially if you're paying a premium. You're showing off your asset in the best light. That's just something small that I think would really make a difference for them. You know, and this being one that I am thinking of investing in, because you see here it's 8.75, 7 cents a share. I believe that's the official number. So let's see. Ready? So perfect. Yeah, that actually I believe would be the official number. So you're gonna do 600. If I get my fucking calculator out, it's gonna be $699 divided by, because it's not a multi-family home, it's a single-family home. It's going to be 10,000 shares. You're at almost 7 cents a share times 12 is 83, almost 84 cents per year, divided by $8.75 a share is 0.095, almost 0.096. So you're around 9% is on this. So $1,300, single family home. Let's take a look at the square footage. It looks nice. Property features and details. 4 bedrooms. That looks really good. Resident has lived here for 2 years and the lease expires in June, so that's good. Let's see if we can get in Jonesboro. That's the area we did before. Let's find the average rent. Yep, so the average rent for an apartment size here, if I'm looking at Rent Cafe, is $1,349, which this is coming in below average, right? Yep, 1,300 total, and that's for a 1,037 square foot apartment. This is 1,000, so this is a little more, so I mean, it makes complete sense. They're doing really good with that. And that's 4 bedrooms. This is just an apartment. So let's see, something in that range. This is within the 54% range, so there's definitely a large portion of it. Mainly renter occupied. And the rents, of course, are just going up for this area. And then looking also at the home value, it is anywhere from right on the money to $10,000-ish under what it's worth today is what they paid for it. So it is what they paid for it. That's fine. High rent, a lot of people, as we said before, it's like a 96, 97% rating. The past 7 days, the price has dropped steadily, 850, 915, and 9. So it's definitely fluctuating. October 16th to October 17th, it dropped 40. Wow, yeah, it dropped a good amount. I wonder why. October 6th, rent paid, maintenance request. Not sure why. Lease, the finances, cash balance on it. So it's not bad. Got a little bit of money in case something goes bad. Overall, not bad. But again, I just wish they'd fucking pressure wash it. Another one, 137 Spring. This looks like a nice little house. It shows you the inside of this one. Yeah, of course. There you go. Perfect. So yeah, same basic situations. Actually, 300 square feet bigger, so they paid about 20 grand more. Quaint one-story home, offers a one-car garage, nice yard, sizable driveway, desirable location on a dead-end street. Eliminates through traffic. There's 3 bed, 2 baths, so 1 bed less. I think the same amount of baths. Layout allows flexibility for different types of residents. Of course, they're paying $1,400 a month, so an extra $100. Yeah, of course, it's the same thing. This one's going to get a temporary boost, but I want to find out what it's going to be when that temporary boost ends. Divided by 6.82 is 10% exactly. Plus, I'm going to be getting a little bump for a while for 11 cents. Same kind of situation in this area. I actually like this home a lot better. This one looks a lot cleaner. This one's nicer. It's at a dead end area. Ample driveway space, although you can see the driveway's a little fucked up. A little bit, but nothing crazy. Um, it looks like a nice one family home. So let's take a look at it, all the other factors of it here. Monthly 1,400. That's not outlandish by any stretch of the imagination. Their lease expires in March. So at least they've lived here for 1 year. So that's not bad. There's a good chance they would stay, likely. Offering breakdown: purchase price 170, improvement cost 5 grand, acquisition fee 10,000. So yeah, so they purchased it for a good price. Have a good amount of cash reserve. This one has more equity in it. Cash balance is about the same, couple $100 less. Loan term 5 years. They're paying off pretty quick. So residents lived here 1 year, and it's again likely. Let's just check the average rent in Stockborough. Average rent in how the fuck do you spell it? Stockbridge. My bad. Stockbridge. Thinking borough. Me in New York, you know. Rent Cafe, $16.95. So yeah, same kind of thing for a lot smaller. Yeah, it's well within the price range. Half owner, half rent occupied. Not bad at all. So, and then for this one, let's type in the address, 137 Spring Valley. Yep, so this one's saying that the estimated home price right now is $250,000. So I'm not 100% sure on the accuracy of that. I think that's maybe a little much. It's not appraisal, use as a starting point, yes. But it looks for 3 bedrooms, 2 baths. It's a nicer area. I think ultimately it is worth a lot more, and it's giving me more money, a temporary boost. 4 beds, 2 baths. Well, this one says 4 beds, 2 baths. Why does it say 3 bed, 4 beds? Interesting. They might have fucked up on there. So it's either 4 beds. It says on Zillow that it's the 3 beds, so I'm gonna go with that. But if it's 4 beds, fuck, even better. So I do think that they got this for a good deal, and the price is going up, of course, in the area. So I think this one right now is my primary favorite. And then it says here, in the metro Atlanta area, that rents rose second most anywhere in America in this metro area. That's going to be Stockbridge. So it's definitely a high rent. This is the same. Stockbridge, however, alone was not alone to stretch the top 100. Let's see where it was at. Saw rents more than any other city except for one. Wow, 13.8% increase with the average from 1306 to 1412. So yeah, so this area is definitely going to be a high demand area. For the average rent is also pretty low. Because here for all these 3 bedrooms that I'm looking at, unless they've rented out to multiple people, less flexibility of different types of residents. So unless they rent it out all to like a family, if they rent it to 3 different people, then that's pretty good. But for $1,400 a month, it's looking pretty good. So this one right now is my top favorite. Also looking at this one now. So this is going to be 2174 Scatterboro Road, Stone Mountain, Georgia. Stone Mountain is a beautiful, beautiful area. A gorgeous split level 3 bed. I don't know why I keep saying 4 bed for that. 2 bath home, recently renovated with new HVAC. And this looks like a beautiful home as well. That looks like your typical, like, I grew up in a nice little family home type thing. This looks like a great place to raise a family. I really like this one a lot. Currently renovated. They're paying $765. So let's find that. Let's see. So we're gonna be at $765 divided by 10,000 because it's a single family home times 12 is at 0.91. So you're getting 91 cents, almost 92 cents per year per share. And that's going to be divided by 6.70, which equals 13%. Ooh, that's fucking good. Yeah, I really like that. They lived here for 2 months, and it renews in July 2013. The price for this is average. I mean, it's not bad at all. Purchase price was $161. Total cost was $188,000. Same thing. High cash balance. I'm really liking this one. This one looks really, really fucking good. A little less as far as square footage. Carpets look like they could use some work. I mean, they moved in here now, so I mean, somebody obviously rented it. Let's see, Stone Mountain. Let's find the home estimator for this. The home estimate for this one's $232,600 according to Zillow. All the other information is pretty accurate, so this looks pretty fucking good. I think there's definitely a lot of equity in this home. 76.76. So for a little bit, I'm gonna get a bit of a bump. 10 cents, nothing crazy. So I'm not too crazy about that. That's good. Average in this area is the same. So, Stone Mountain, Georgia, the average houses for rent, you're looking at 2,000, 1,545, 3 beds, 1,572. This is very, very comparable to what you'd see in the area, if not a whole lot less, to be honest with you. So this all looks really good. I'm really liking that a lot. 3 beds, yeah. This is kind of towards the cheaper side, and the home looks as good. If you go on Rent Cafe and type in Stone Mountain, it looks as good, if not better, than any other area here. So, yeah, I'm really liking this one a lot. 153 Spring looks like a nice little home. Same kind of situation as the other one. Nice, like, family home type thing. 3 bed, 2 bath. I don't know why I keep saying 4 beds there. Purchase price was a little more. The rent is less, so $1,450 for something pretty similar. Less sold here, so there's a temporary higher bump. Currently vacant as of October. Yeah, I don't like that. So we're gonna skip past this one because I found 2 that are, one that's definitely better, and one that's somewhat better, but a vacant home is not a good thing to rent. So next one's 8780 Churchill. Again, same kind of situation. This one looks like at least they might have pressure washed the fucking house. Looks like they need a little bit of roof work, but nothing crazy right now, it looks like. Home creek right in the backyard, located in walking distance to Independence Park. Also easy access to highway. That looks nice. The price of it has gone up significantly recently. A lot of fluctuation. Wonder why that is. Interesting. So total is, yep, you're looking at about 7 cents a share. So November 2022 is coming up. They may not renew their rent. Less home value, less cash balance. I think we have a better option with the Scarborough one, so we're going to move on. So last one we're going to look at is 126 Wildwood. Again, nice home. Nice family home looking thing. Has a garage in the background. Interesting carpet design. The home looks really good. Looks like it was taken care of a lot. Looks like still needs some pressure washing on the outside, but overall looks good. Great ranch home, upcoming area, Stockbridge. As we know, it's a great area. That's seeing increased home value. I believe it is. Maintenance request has been submitted. Okay. Late fee. Okay, so they're late on their rent. Decent amount of fluctuation. Same situation. March 2013. Residents lived here for 1 year. 58. This one has a higher cash balance, I believe. It's not bad, but I'm still just seeing everything liking the other one. The other one, the benefits that this one is that they have a higher cash balance. The rent's a little cheaper. They've lived here for a little longer, but the lease is coming up in just, 6 months. They may not live here still. They may move. There's no temporary bump for about the same. I think it's less money I'd be making on this one as well, and less percentage, definitely. Again, late fee collected, but it's late, and maintenance requests. So there's stuff going on right now that I think they have better options. So, I mean, you guys can go through and look at this yourself. Some other ones I recognized beforehand that were 8% was 1750 Summerwoods, 8796 Parliament, 45 Robertford, 8641 Ashley. Those all have 8% increases, 8% dividend that would be paying out. Likely that there's little increases they give are both to help investors in the short term, because then they're making money and they don't have that big cash balance for it, but also to drum up sales for the houses with like a significant buy-in that doesn't have a lot of interest to it. So say something like the Brooklyn properties, they have interest to it. Obviously it's great, nice, good area, but people want to make that money. The app could not be here like a year from now. And then having to sell that share is going to be a difficulty. But like as you see here, it's 73 cents when opposed to you would be getting, so 73 cents a month when opposed to you normally get 597. So usually it would be 10,497 divided by, because it's a multifamily home, 100,000 shares, you're getting 10 cents a month. So this is going to drop to less than 1/7 of what it is currently. So I mean, if you have it here and you're making 73 cents a share, so 0.73 times 12, you'd be making $8.76 divided by 27, 37. You're at 32%, which is fucking great short term. And then as people buy in, the cost of the share is going to increase. So then you're making likely the same, maybe not, comparable to, but around the amount. This can go to then $35, $40 a share or something like that, but then you're going to be getting less money. Not a bad idea if that's what you're really banking on. I have a friend who's banking on something like that the home value is going to increase, and that's what he's really going for. I invest in stocks. I invest a whole bunch of different things. I'm investing in companies that will do that. For my alternative investments, I want cash flow. That's my main goal, especially real estate, as you talk about by mall and everything, especially because I'm not owning this property directly. I have to sell it through them and sell it through a share. Cash flow right now, that's my thing for it. Especially with a bear market and stocks, I could buy in, you could buy, I'm just throwing names out there, not saying you should necessarily invest in these stocks, but say something like Apple. I can invest in Apple and Berkshire and Disney and Meta and just S&P 500 index and something like that where it's now like very, very undervalued. They lose 30, 40% of their value recently, and the company's not worth 30, 40% less, or Target, or whatever company you feel is worth the money. I can invest in that and make a significant increase, so I don't really need to do something like this with that because I don't know what the increase is going to make. I know I'm going to make a lot with the other increase. This, I want something to cash flow, while my other investments, those may not pay cash flow. They may pay 1% or 2%. So something like this, I want a higher percentage. But that, again, is just me personally. So that's some properties I looked at. We're going to go with 2174 Scatterboro, but 137 Spring was a close contender, and 153 Spring was also a close contender, I believe. So good stuff as we've seen. Make sure you go through yourself. If you follow on, you're looking, there's a lot of good options for you. But I think the 2174 Scarborough is what we're going for. Hope you guys like this video, and let me know in the comments below if you're following along. Which one of the homes that you would have invested in? Is this something that you're enjoying? Are you thinking about investing in real estate? And just overall, what's your opinion on real estate investing? And if you use Landa, I've talked to a couple people who use Landa. Do you like Landa? So if you guys like this video, make sure you like, comment, and subscribe, and I'll see you all next time. Peace.